Hey guys, welcome to another video brought to you by Total Control Traders. Now, when I was looking at the market today, always try to stay one step ahead of what the market is doing. And today we are going to cover some of the key topics on what the market could be doing after this leg up. So right now, obviously, for the bulls, congrats. This is what we have been waiting for. 30-minute trend change, hourly trend change, 4 hours, not yet, but it is looking pretty darn good. So from here, what are we going to be expecting as the next reaction? Bears, of course, but when, where, that's what everyone's question likely lies. All right, so let's get into the market. We're gonna do a market deep dive on why I think there is going to be an elongated, very dragged out, potentially one of the bigger, but definitely not, I don't see it being the biggest, one of the bigger and longer consolidations. All right, let's get right into it. First one, we are still going to remain our focus on NAS. Reason being, NAS, the one who's been driving the market up and down. So we're going to take a look. I mean, right now we are potentially seeing a reverse sector rotation. Okay. All right. NAS, lower low, lower high, higher low. That's your chance. If you wanted to take the risk, of course, that's your chance. And that's why I said congrats, bulls, yesterday. If you had the guts to swing bulls, that would have really paid out. Tuesday, actually. So from here, now looking very bullish. Extremely bullish on the market. On NAS, we did somewhat see a higher low, but technically, maybe on the 4 hours, but technically on the daily, it is not a higher low. Okay, so on the 4 hours, as mentioned in this morning's video, as well as in the chat room, that this is the most bullish case possible. Look at this. Run after a higher low. Technically, we didn't even lose this key support right here. Yeah, so we lost it a little bit and then immediately bought up. Okay, that was the key. Same as if you were viewing at smaller time frames, as I mentioned in the chat room today. Watch for that immediate buy up. If there's a breaking to the lower low, a close in this case is a close to the lower low without follow through, immediate buy up. That is your bull signal. From here, we saw a hold of this 0.382 from the low to the high. Actually, from the higher low to the higher high. We saw a hold on the 0.382. What does this mean? Bulls, we are going to see continuation. So from here, the target remains, for those of you that doesn't follow the Twitter account, make sure you follow it. I only share key informations on the Twitter account that are, whether it's one call a day, the top plays that I'm looking at, or the likely scenarios, the most likely scenarios, or the potential scenario of a huge reversal, things like that, the crucial points. That's what I share on Twitter. And the Twitter account is under underscore TC Traders underscore. So search for underscore TC Traders underscore. Anyways, so from here, we saw a break of the key trend line. Now the problem I have with this break, and now looking at the 4 hours, it's actually okay. Anyways, so the problem I have with this key trend line break is if you zoom into the 30-minute or even the hourly, you will see that we didn't come back to back test the trend line. The trend line that I was tracking, to be specific. Now the reason why I have a problem with that is the top trend line. I only drew this today because of potential backtest using this trend line. But the problem I have with this upper trend line is if you were to draw it to the most recent, as generally what the rule indicates, the backtest does not work. So remember in the morning video, as well as previously mentioned, when you are drawing a trend line, use the most recent price action, but you want to backtest to make sure that it works. So on this most recent price action, it works going forward. You can see the backtest here. But the problem with it is you don't see the rejection over here. You see the rejection from before, but it's not that clear either. So this brings me a little bit of a concern that we did not backtest this actual trend line. Let's call this actual trend line. This actual trend line where we rejected off of previously, as well as right here. So we didn't backtest yet. Now, ideally what I want to see in the aftermarket is aftermarket from here making a higher low, backtest this trend line, lining up. Wait, no, that's the upside. So let's see if it lines up with anything. Ooh, that would be a not very nice backtest. So in the case that we backtest later on, we can be looking at also a backtest of the 2003 trend line. However, that would still be bullish because on the 4 hours, that would be a higher low. So the meeting of triple confluence right here. And this is the reason why I am not swinging decent sized bull positions, because of that lack of the backtest. Now, I just realized on the 4 hours, is showing a backtest. So we could very well be very bullish from here. Regardless, in the case that the chart decides to say, hey, you know, on a shorter time frames, we didn't backtest the trend line yet, let's go back to backtest it, then we would be looking at this area, the 0.382 lining up with the 2003 trend line, lining up with the most recent correction trend line. Triple confluence, my favorite. So tomorrow, so we'll be looking over there. But regardless, the ultimate target, the first target would be the GP, which also lines up with the key zone. Previous, we're gonna have to zoom in closer, 4 hours. Previous, no rejection here. Support, nothing here. But it's gonna be around that area. 13,260. There is a chance that we just run straight into the GP before the rejection and the backtest. So keep that in mind. Now let's cover, so this is NAS on the shorter time frames. Let's cover why I think that the market could potentially be looking at an elongated, stretched out, further, whatever you want to call it, consolidation. And this is not going to be a correction. This is going to be the next consolidation that we're going to be discussing. So with the, what is this? All right. So a few things I'm looking at. Let me pull up the message first here. All right, 5 reasons why I am looking at the potential of a long-term consolidation. First one, there is a saying of sell in May and go away, and there's a reason for that. If you backtest that theory to every single summer, probably, if not 9 out of 10, 8 out of 10 times you are going to see sell-off. Then second one is US 10-year. 10 years, we are seeing a daily divergence that is playing out. Now, this was a concern for a lot of people on market bull, market bear, whatever. It's 10-year bear divergence that's playing out. So essentially, if 10-year were to drop, the indicator that I use personally is not the US 10-year indicator, but instead the 10-year over 2 years. So on the 10-year, 2-year, if the 10-year were to drop, 10 over 2 is obviously going to drop as well. And that, for those of you who were my financial planning clients or know me before for calling out the correction in 2020, this part was the majority reason of why I called out the correction in 2020 or coming up. I didn't get the exact date because I wasn't looking at the market all the time, but this time, hey, I am looking at the market all the time, every single day, 24/7. Maybe not 24/7, but you get the idea. So from here, as mentioned before, we ran before this run on the 10-year over 2-year was 1,285%, 1,286% in 1,121 trading sessions. Versus this time, we ran 1,123% coming to a double top for over 249 trading sessions. That is less than a quarter of the time it took for US bond 10-year over 2-year yield to run similar amount. And not to mention a double top that we are seeing. So from here, we're going to have to watch very closely to the US 10-year over 2-year. This has not failed a lot of analysts out there, has not failed me in the sense of my first ever call out of market correction. And Kwanzaa can back this up. I've been warning him about it since I think probably towards the end of 2019 when I was a financial planner back then. But let's watch for this. Make sure you keep an eye on the US 10-year over 2-year. This is a leading indicator, and we are seeing a double top on it. We are seeing also a daily bear divergence on it. Are we seeing monthly bear divergence? We are not seeing monthly bear divergence. There is a very clear weekly bear divergence as well. And let's just draw this out for you guys. Ooh, that is a extremely strong weekly bear divergence. I'm surprised there's no monthly bear divergence, but yeah, extremely strong weekly bear divergence. So note that. That is reason number 2. Now, anytime I call out market correction or major market move, any sort of major market movement, whether if it's going to be extremely bullish or extremely bearish, there has to be multiple items that all line up. In this case, there are multiple items that line up. So second being US 10-year over 2-year. Next is the VIX. The VIX, we are seeing, my dog does not like the way I'm talking. All right, the VIX, we are seeing coming up to a key support on RSI. Now, if we're to look at this differently, I'm just realizing this. Potential trend line. This is my first time ever drawing a trend line on VIX. So I'm gonna have to backtest it a little bit further, but it does seem to work. So bounce here, break down under, immediately bought up, support here again. So weekly trend line, key trend line, as well as key RSI support level at 46.50. That is coming up. That is reason number 3. Then the next one, DXY US dollars on the monthly. Again, it's going to be monthly because we are looking at long term on this potential correction, actually consolidation. But because the market is still in an uptrend, essentially on the daily, or not daily, weekly. On the weekly, the market is still in an uptrend, so we are trying to forecast what is going to happen. That's why we're using the longer time frames. On the US dollar DXY, there is a slight monthly bull divergence. On the daily, you can see a potential of a head and shoulders forming, but on the monthly, you do see slight bullish divergence. It is slight, regardless, it is there. So meaning on the monthly, now that we have been trading under the monthly 8 for quite some time, and this is historically, if we were to backtest this on the monthly, I would think that there would be a key level right around here. So there's obviously a key level around the 89.60s. But let's try to find a zone. How does this work? Too high. I do like these supports back here though. $86. Did I say 86? There we go. That makes more sense. All right. So breakdown, fake out, then bouncing back up and support. Now this is since the beginning of US dollars chart in 1988. Breakdown, fake out, resistance or rejection, support, and then breaking out before another support from the zone, breaking out and support from the zone again before the breakdown. Then from there we see rejection, support, nothing really happening here, another support at the top of the zone, that will line up better. Yeah, that will line up better. Resistance, quad resistance, and then at the top of the zone, and then another double rejections from the bottom of the zone, and a support from the low of the zone, and now we are seeing a monthly bull divergence right in the middle of the zone. So that is reason number 4. I have not, usually, 3 reasons is good enough for me, but this time I actually managed to find 4 reasons. There's the VIX, there's the US 10-year over 2-year, the US 10-year, as well as US dollars, and then this time there is also gold. Gold I don't usually use as a leading indicator, but it is very commonly used as a leading indicator. So I check it. Most cases, I don't use it too often. Why is it double circles here? Anyways, let's take a look at gold. So on gold, there are a couple of things to note. I don't know why there's double drawings. Anyways, so this was 2012. Okay, this was the 2012 chart, the previous all-time high. This is the current chart, and there is no bear divergences. Chart is cooled off after this potential, not a monthly, but maybe like a yearly or 6 months, whatever you. Let's actually try it. Nope, there's no month. Okay, so there is potentially a bull divergence forming depending on what time frame you're looking at. But if you compare the charts, all right, previous high, wicking off of it, previous high right here, wicking off of it, there's downward pressure followed by 1 month bounce, followed by 4 red candles. So there's downward pressure followed by a 1 month bounce, followed by 1, 2, 3. Now we're potentially seeing 3 or 4, but we are at that previous all-time high. And from there, we saw 4 months of straight bounce. So there is a potential for another 3 to 4 months. This is a shorter time frames versus the previous, because of how fast we're bouncing in the market. So I would think maybe 2 to 3 instead of a 4 months bounce, but chart is setting up very similarly. Now that is reason number 5. So 5 reasons, that is enough, more than enough. Generally 3 is enough to convince me. There is 5 reasons why the market would be going down over the long term. Majority of these are monthly time frames. So then now let's take a look at SPX. SPX today, we were just about to make all-time highs. So I had these two drawn because this is where the real body is. This is where the actual all-time high is. We are going to reject from somewhere along that line, whether it's a stall or a rejection. On the daily, we are getting extended from the daily 8 again. And we are seeing a slight rejection so far from that all-time high zone. I didn't want to draw a zone here because there's so many zones already. Actually, some of these probably doesn't apply anymore. I will clean it up after the video. But regardless, we are seeing a rejection from the previous all-time high zone. From here, as mentioned in the trading chat room, we are looking at a daily higher low that is very well needed. So I would imagine today being the top, and that's why I can draw this very confidently, because I don't imagine tomorrow to break over into a new all-time high, considering how far we are extended from the daily 8. So where is the pullback gonna be looking at? Strong case scenario, lining up confluence, this key zone, previous high rejection of the 1-to-1 extension around the 38.71. 38.69 is where the 0.382 is at. So would anticipate a support from here. That would be the most bullish case. Bearish case, GP hold. Considering how strong the SPX has been in the sector rotation, I would anticipate a bounce from the 0.382. From there, we would be looking up at confluence of 30-20 to 40-20 to 40-30-ish. That would be the target. And if that were to be broken, the 4200 zone is the next target. So what we're looking at from here is a new all-time high. And if I were to draw a fib or a Elliott's wave, it would be 1, 2, 3, 4, 5. Now we are going on an extended run of number 5. 40-20 to 40-30 makes sense. There is the psychological resistance right before that at 4,000. Then following that would be around the 4,200 mark. So SPX is showing me a top as well on top of the 5 reasons that were discussed. Now NAS, I didn't go too far into details because 6 reasons is more than enough for me. But NAS, we are just about negating that daily bull or daily bear divergence. This one is no longer in play. Potential top of NAS. There's the confirmation why we're going on an extended run for the market. 1-to-1 extension has already been surpassed as of yesterday. Now from here, I don't imagine we're going to go into the 1.618. So the target is likely going to be around that 34,195 mark on Dow's, sorry, not NAS. All right, so that's it for the market. There's not too many requested tickers today, so I was able to spend extra time on doing market deep dive, especially since the market calls for it. Now the next ones up are same as usual, the hottest tickers. First one being Bitcoin. So with Bitcoin on the new high, is this a new high? 58,354. 58, not yet. So if we were to make a new high, there will be another bear divergence. There, Bitcoin still, I am still looking bearish on it. We did break over the ideal bull channel, showing that Bitcoin is still extremely strong. This is or was a weekly bull flag. Now that the weekly has been dragged up, we are likely looking at a monthly bull flag. Bitcoin, very strong. Now we are seeing there's a huge monthly bear divergence forming. We're going to need to break 96.02 RSI in order to negate this monthly bear divergence. And I think the chances of that are slim. Not going to say very slim. Bitcoin is extremely strong, negating a lot of technical analysis that are generally used. Bitcoin is just another story, but would anticipate further bearish action from here. So what you could say is on the weekly chart that this needs to be up a little bit to the wick. We're gonna need to see a rejection very soon for this bull flag. Now, mind you, bull flag could be just sideways bull flag as well. That'll be an extremely strong bull flag. Anyways, next one is Tesla. Congrats, Tesla bulls again. Daily, yeah. We did close over. Oh, I thought we closed over 700. Okay, so we closed 40 cents under 700. Now with Teslas, there is a lot of option bets coming in for tomorrow, 700 calls as well as 750 calls. Now with that going on, I would imagine that the market makers would try to pin Tesla right under 700. Reason for that, so they don't have to lose out on money on options, letting people buying Tesla at a lower price. Reminder, next week is OPEX week, meaning market could be very choppy. Would expect next week to be the week that we make daily higher lows on the market. Next one, PTON. Very strong today. We closed near that high of day, negating all sorts of pullback. Volume still not there, but this descending volume, this decreasing volume shows me a move is coming soon. Next, PLTR, similar idea. It is relatively strong today, closing near the high of day and higher than yesterday. Still lacking a little bit of volume. Tomorrow, gonna want to see a little bit of follow through to confirm these two biggest bull volume days ever. Gonna need to see these two play out. In order for us to see these two play out, we're gonna need to see a close over this $30 mark. Once that it has been reached, we will be looking at a gap fill of 31.35. Next, XOM. A little bit of pullback today. This could be a reversal candle. Volume is not there. There is a bear divergence on the daily, so would anticipate a little bit further price downward price action. Let's redraw this fib because now the price has been higher. And XOM does not like to keep my channel. Okay, whatever. GP would line up with previous high. That would be the most ideal entry at the GP. $51 mark. Daily does need a higher low. Next, W. Still in that wedge. Still in a monthly bull flag formation. Chart is relatively strong versus the market. Monthly bull volume looks decent. 11 days in, and so a third of the month in, we're already seeing 2/3 of the volume. So should see follow through this month. That's it for the hottest tickers. Next ones up are the requested tickers. And let me just check this quickly. All right, so the requested ticker, TWM Canadian. Nice bull volume. All right, let's see. So there was a huge descending wedge forming before. $120, very noticeable support. This is the key zone to break. We can see a previous, the most recent rejection was from 124 as well, which was the support that we found. Weekly trend has changed. No divergences. This is no longer considered a oversold bounce because trend has changed. Bull volumes coming in today. Earnings is negative, very slightly. So there was a bull divergence back here as well on the daily. Which marked the higher low. Now, if we were to try to find, I think regardless of how we try to find it, the ticker is very bullish. If you're not in already, wait for a back test of this trend line. I would imagine 110. Okay, so off by 1 cent. 110 would make more sense because it's double rejection here. I would imagine a rejection, would anticipate a rejection from that 110 mark, initial rejection, followed by a potential breakout similar to back here, and then another rejection towards that 124 mark. If we were to see a rejection off of, phone's going crazy there. If we were to see a rejection off of 110, depending on how long we pull back or how long it takes for the pullback, ideal entry would be somewhere around here, 0.3. It could also be the 0.5 if it's a faster pullback. So it's going to be right here or right here. Then that's it for the requested ticker today. Only one tonight. Lots this morning, but one tonight. So let's take a look at a few tickers I'm watching personally. One, Airbnb. There's still room to run. Chart is bullish. There is not enough bull volume. This was an amazing bounce so far. We are right around that key resistance. That doesn't look great. Okay, from what I'm seeing, we broke over the key resistance and support. Nothing too much up ahead. This one is a shorter term one, so it doesn't really apply. This one, didn't even know that was there. Oh yeah, key zone. Okay, so I don't need this one. So we did break over the key zone. Back tested the lower trend line of the channel. Would anticipate a little bit of rejection on the daily. We do need a higher low. So if we are looking at a higher low, would make sense for us to pull back to the GP. Where these previous resistance and supports have found. So if I were to draw a zone right around there, a very easy zone would be right there. Just above the GP. .382 has somewhat of a rejection and support before. So strong case scenario. Wow, it's right on it. Off by a cent. 186.06 versus 186.05 on the key resistance. Not really a resistance, but we do see a big upwick. Support broke down under rejection. No, this is in a downtrend. Rejection right here. So 186. If we were to bounce from there, that is a very bullish scenario. I'm going to cover a couple tickers that we haven't looked at for quite some time. And they do look very interesting. The first one is PSTH. So with PSTH, we have seen a crazy bounce so far after revisiting. So now I was discussing this with my buddy. What we're seeing here is rejection from this key zone, rejection from the key zone before breaking out, coming back down, and then another rejection here before another breakout. Now after this actual breakout, we never back tested it. Okay, so the channel just kept us up, except this breakdown before from backtesting this other key zone. This higher up one, you can see rejection, support, support, support again, This was the backtest of this middle key zone, but this lower key zone was never backtested until this the most recent correction. We came back right to that zone before a huge bounce, 22%, 21.5% on one single day. I don't know how we missed it. I didn't see it in any discussions. No one brought it up. But PSTH, this was a huge, amazing bounce from the key zone backtest. Now we are seeing 24%. So since then we pulled back a little bit. From this move so far, this has been one single move on the daily. It would make sense for us to come back to backtest this zone again if we were looking for a daily higher low. The 0.382 would also make some sense because you can see rejection right here, rejection right here. This is another rejection because we did not close over it. So the 0.382 would make some sense too. Ideal bull case scenario, bounce from the 0.382. Let me just draw a zone here. Make a note of it. That doesn't look great. All right, there we go. Rejection, rejection. Another one, support. Never close down under. Very key. So support again. And I support right in the middle of the zone. There's a lot of zones on this chart. All right, so this would make sense if we're to bounce from the 0.32. If we were to lose this zone, we'd be looking at the GP. There is a very decent play on this chart after this backtest of that IPO resistance zone, because now that's been backtested, the chart is ready to go. Make sure PSTH is on your top watch. Even from the current price to the upside, $6, what is that? That is another 20% move. And I would imagine that we're going to make new all-time highs on this chart as long as the market cooperates. The other one, the last but not least that I want to cover is NIO. Very interesting that I did not see anyone mention this ticker as well. You know, when this chart was moving back, let's see, starting here, this move up, pull back, and then starting somewhere around here when it started moving again, there were talks everywhere about people wanting to get into NIO. This upward momentum making new high, people wanted to get in from here, but no one talks about it after this. What is this? 50% pullback. No one wants to buy? Like, come on, guys. Low, since the beginning of the move, this trend line lost it once, got bought up, then support, and why does it keep moving? Support here, support again, wicked down under but bought up immediately, and then now we wicked under it again. Next day, what is this? The next day gap down, closed near the low of the day, but right on it, and then the day following, gap up, straight buy up. From there, it has been a straight bull momentum. This alone has been a 44.66% move already. Why does no one talk about NIO? Come on, guys. This move on NIO, even just a bounce to the 0.382. Actually, we already passed that. This bounce has been amazing. The bounce is already past the 0.382. So, GP, I don't see any confluences here. 0.5 I do. That is the next target, 0.5, 48.30. I hope somebody got in on this trend line. This was an amazing play. 47% move already. And likely, we did close near the high of day. We are likely to test that 0.5 at the very minimum, 48.30. All right, so that's it for today's video. Hope you guys enjoyed the content. Make sure to give a thumbs up. Please don't forget, give us some thumbs up. Help me out. If you are looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. Also, check out our website as well as Twitter. Website at totalcontroltraders.com and Twitter at _TCTraders_. We offer 7-day free trial to our chatting platform where trading ideas are shared and charts are reviewed live, as well as my personal trade callouts. Hope you guys stay safe and be in control. Thanks for watching, guys. I will see you in the next video.